live streaming. Shit. Frick. Okay, I hope this is working. Let's see here. Check a couple things. And make sure we're live in a moment here. What the heck? Just making sure. Okay, I guess I am live. Having some problems here with everything going on, so I can't tell if I'm live or not. It looks like I've got a little delay. Problems here with everything going on, so I can't tell if I'm live or not. So I guess the stream has started, but I can't monitor it quite the way I want to. But I guess it is working here. So can you guys hear me? A little bit of an echo. I think I turned it off now, so you shouldn't have the echo. But I am going to be a little delayed, I believe, on the questions because for some reason it's not letting me see the chat live. So oh well, it is what it is. But you can see me and hear me, see my screen at least, and hear me. Hopefully live, so looks like it's okay. But you can see. It's been a little while since I've done one of these live. I guess that's why I get the recordings. It's a little bit easier to control everything. Looks like it's okay. Done one of these live. All right. I guess that's why I get the recordings. A little bit empty in the room so far, but hopefully we'll get a few more people coming in here. Still hear an echo. That's strange. A little bit empty in the room so far. Not sure why there's an echo. Let me see if I can change. Still hear anything? I have no idea. Strange. A little bit empty in the room, so I'm not sure why there's an echo. Let me see if I can change. Still hear anything? I have no idea. See if I can mute that. Sounds like two different streams. My voice in the background. Ah, that's weird. Are you hearing it now or no? I made a few changes. There's one delayed. Okay. So probably because I'm watching the stream on a different channel. Now it's good? Okay, there we go. It's gone now. Okay, cool. I figured out what I had to do. I had to turn a couple things off. So hopefully everything works well. And welcome to the live Wendell effect. Man, a little crazy there. Not sure what was going on. But yeah, looks like I got it working anyway. So gotta love technology. Anyway, so we'll go kick this off. Before we get started, just gonna remind everybody that we're not broker dealers or investment advisors. We're taking a look at this information from an educational standpoint. Not telling you to buy, sell, or hold any particular securities or giving any personalized recommendations about the markets. Oops, hold on a second. Let me fix another thing here. So many programs open on my computer. That's not what I wanted to grab. I wanted to grab me. There we go. Move me to the other corner. Anyway, past performance, no indication of future results, and we're not subject to trading restrictions, so we could have a position in a security initiative one at any time. Whew, there we go. And you can always get a hold of me if you like at brandonwendell.cmt@gmail.com. You can also hit me up at TraderBW. Sorry, turn off the vibration on my phone right there. All right. And obviously you can find us on YouTube because that's where you're at right now. Okay. So, cool. And let's see. It's strange. I can't even see how many people are in that room or anything. I don't know. Live chat. There we go. All right. So, for today, I'm going to pretty much do my normal schedule, but also open it up for questions. But I normally do my weekly market analysis and look at the equity index futures from a live standpoint. We'll just kind of go through them and see what's going on with those for the next week, possibly even beyond as well, since we're getting towards the end of the year. I'm actually going to be going on vacation, so I may not be able to produce another video until I get back next Tuesday, I believe it is. So I'll be gone for about a week. Anyway, you can also, we'll take a look at some of the energy futures, do a little sector analysis I've got prepared for you. And for the most part, yeah, we'll just go from there and see. Oh, there it goes. Now I can see What's going on live? Cool. That's so weird. I know it is actually delayed still by a little bit, not too bad. Okay. So for the week of December 19th, I'm going to jump into live charts here. So let me just jump over to my live charts. I was looking at, got a sugar position that's still on long and doing pretty well, but I'm going to jump over here to the equity markets. And on the 60-minute chart, I'm going to go to the bigger time frame in a moment, but I do have the 60-minute chart here, and I was wondering about inverted head and shoulders today. It looks like we broke the neckline, but really fizzled out. And if we clean this chart up and go back to the bigger picture, it looks as though we may actually be fizzling out for the rest of the year. I don't know if we're going to get a lot of motion in any direction as we go here to the weekly chart on the ES, and I should go continuous just to get a better view here. So I'll do that. And, oops, wrong symbol. Sorry, wrong keystroke. Changed so many different programs I have. And there we go. Continuous, most liquid. Perfect. Once again, I got to clean this one up. So we'll do that. There we go. And you can see the kind of mess we're in right now as we're pulling back. If we're looking at big picture here, really, we have launched from this low going all the way back to 2020. And our bull market is doing a pretty deep retracement, which is actually now a bear market, obviously. And it looks as though we're close to 50% retraced. Yep. As you can see, we bounced near the 38.2% and made it almost down to the 50%. The biggest question is, are we going to have enough momentum to continue to make a new low this year, or will it be January? I'm thinking it's going to be January. I don't think we have enough momentum to continue down to make fresh lows this year. But I do believe we are going to make fresh lows. You know, looking at this continuous chart and actually add in a few more of these Fibonacci retracements with the values as well. We got 61.8, 78.6, if you will. And that 61.8 is looking pretty good for a downside target around 3,200, to be honest with you. So we could see us moving down quite a bit. There's not really great demand anywhere along here. Yes, we have some buying pressure that originated right in this 3250 area. And as far as an actual zone, though, well, I suppose rally. No, it doesn't really work right in here. The only thing I have is this little one that's been tested right at the 61.8. And that is this little rally base. And actually it doesn't work because the leg out candle doesn't clear the previous candle's high. So on the weekly, the only thing I have is right back down to the 2020 lows. So will we get that far? Probably not. I could see us actually stalling out right around that 3,200 level, but I do believe we will see new lows going into the new year. So dropping down to a daily chart, looking a little more immediate. And by the way, as I'm doing this, I hit the wrong keystroke here, sorry. Let's try this. And as I'm going through all this, if you got any questions, obviously, just ask. And let's see here. Let me go and clean this one up too. And go back actually to the specific contract to get a little more detail. So here we are on the daily chart right now of the ES, obviously still heading down. And really, this is not the leader, and I'll go over that in a few moments too. You can see we have had an impulse, a correction, and I can tell that we're going back down, and I kind of knew it going into last week, and here's why. I use the RSI quite heavily to help me with identifying momentum, and one of the major things that happens is when you make highs and the RSI gets above 60, generally you don't make fresh lows. And you can see we had trouble making a new low. We didn't stay down below this low very long. We went back up. But when you don't have bullish momentum, meaning basically any price action you see that takes the RSI above 50, that's bullish momentum. And obviously, if you're going to be making big moves to the upside, you should be seeing lots of bullish momentum, right? Oh, great okay, great sound. Now, good. I'm glad you can see here. Okay. And if you see the RSI below 50, that is bearish momentum. So obviously, the stronger the momentum, the stronger that particular trend may be. But if you fail to get in this bullish territory, which actually is 60, so I've got these cutoffs here where extreme bullishness comes in, and you're technically overbought not at 70, but at 60. And it works a little bit better rather than the typical 70-30 that most people use. And you'll see why in just a few moments. Over here, oversold is 40. Okay. So if in a rally we failed to get above 60, that basically means that we barely have any bullish momentum left in the trend whatsoever, right? So if we don't have a whole lot of bullish momentum left, guess what? You get very fast moves to the downside. Now, the problem with this move that we just encountered is, yes, we got stalled out down here at the previous rally, but we've gone into oversold territory. Now, most people think if you're oversold, prices are going to go up. That's not true, okay? If you're oversold, you could become more oversold. That's called a trend. So we did snap the downtrend, obviously, but we also snapped our uptrend. We made a higher high, but then we made lower lows. So really, we have no trend right now, but we are leaning more bearish because we do have these stronger lows and more bearish momentum forming. So we will make a lower high pretty soon. So we're going to get some sort of retracement back up on the daily basis here. Let's see. I'll do it that way. If I bring up a Fibonacci retracement from our impulse down, sorry, let me close my door. I got a lot of angry ducks. Ducks messing around with my dogs out there. You hear them yelling at them. Angry birds in real life. Anyway, there we go. So we got that retracement now. We can look to see as we pull back, and you can see the bullish pressure on today's candle, right? We had a move all the way down. We were very, very bearish, and now we started rallying back up, and that's because we lost some of our bearish momentum. But overall, we went too bearish, which means we're not going to be able to make a new high. So it's almost impossible. I'm not saying you can't do it, but it's almost impossible that we'll see this 4100 before we make a smaller high and then drop down even further. That's what I'm looking at right now. So if I drop down to the 4-hour time frame here, now we can start to look for correlation. And what I'm looking for really is a correlation between a retracement value and a zone. So what I see as far as zones overhead, really one of the best ones is probably right here. We have this drop base drop, although it's not the best. And you could argue that this area in the 23.6 also is a drop base drop area right there. Okay. I haven't seen me live for a while. Since OTA, yeah, I left them a while back. So doing well on my own. The Training Mindset Association or organization, sorry, that we're doing here and a few other things. So good to see you too, Jake. Virtually, that is. So anyway, we have that pullback that we're getting right now pretty much into that area. And you can see how much bearish pressure we have. We're completely in that oversold area, right? So this momentum is very, very strong to the downside. Matter of fact, we're almost forming a little bit of a trend line. I'm getting too many lines here, so I'm going to delete this Fibonacci for now. And when I say a trend line, first of all, in order to be a trend line, you really need 3 touches for it to be confirmed. And it looks like we don't have it. I thought we might with the shape here, but it really doesn't. So I'm not going to use that because it's not confirmed. It's not good. But we do have drop base. Again, that doesn't really follow through. I'm not going to use that either. So what I'm seeing right now for the 4 hours at 39.16, we could rally up to that point. At the highest that we could possibly get to, I think, on the S&P is going to be right here. Drop base drop. That's the strongest supply zone I'm seeing in this whole picture. That would still keep us in a bear trend. So if we do get some sort of bear market rally going on that happens to go up to this 40.25, 40.43, that'd be a great shorting opportunity to re-engage this downward trend. I don't know if we're going to get that, or again, we're not as strong down as we have been. You can see we've got a bunch of green candles pulling us back up as we're trying to drop. So it'll be interesting to see. We got to start dropping by tomorrow. And typically the last part of the year here, I know a lot of people are looking for Santa Claus rallies, things like that. Let's see what the historical moves are. I got a few things I'm monitoring right now. Got bear call spreads and iron condors, all kinds of good stuff going on. But got some tools that can help us out that I use on a regular occasion. One is MRCI, and the other one is Season X. And I start to look at the seasonal movements. Whoa. Hate when that happens. Every once in a while, MRCI does that. There we go. And I think I'm logged in already. Anyway, if you're interested, you can get an annual subscription to MRCI. They will give you a 10% discount if you're interested. Basically, the best way to get that is if you enroll, you go to where it says purchase subscriptions. They give you 14 days to try it out too. But when you go to purchase and it says source, under the source, if you put in the word wealth and my name, Brandon, they'll give you a 10% discount. So that's 10% discount for annual subscription to MRCI. There you go. Anyway, the reason why I bring this up is we can actually take a look at some of the futures seasonal patterns and try to kind of guesstimate what is likely to happen with the market. So when I go to the indexes here and the S&P 500, I can take a look at the March contract and get an idea of what it should be doing for the end of the year and going into the beginning of the year. And you can see that, the Santa Claus rally is not a real thing for the past 5 years. Let me just go ahead and duck out of there we are, older times. And you can see that, sorry, that's not the end of the year. There's the end of the year. And really, we're kind of in not really a lame duck area, I guess you could call it that, but it looks as though the markets really just don't go very far or very fast until after the beginning of the new year. So we may get stuck in a little bit of sideways movement. You can take a look at the historical movements. The last 25 years, there was a Santa Claus rally. It was decent. Starting off pretty much this week, the 19th, and ending beginning of the year. But in the last 5 years, Santa's been a little stingy. You can see that angle of attack is much less than what it's used to be. So I would not expect the big Santa Claus rally. And I can also, again, show you here on this tool, which is called SeasonX. And before I forget, open something else up for you. I have a link for that too. I don't know if they're giving discounts anymore on it, but I do have SeasonX. There it is. If you're interested in this, it's a little more expensive. But if it's a program that you're interested in using, last 3 years ain't been easy for Santa shopping. Well, there's been a lot of inflation recently too, right? Anyway, what I can do here is take a look at the S&P 500. And with this, I can actually do a specific date. So for instance, I'm going to take a look at the last 25 years, and there we are, the 20th through the end of the year. And they're actually showing a little bit more bullishness, aren't they? They're showing to the 31st. What happened? Didn't take 20th to the 31st. There we go. And it shows 80% of the time over the last 25 years, we've had a bit of a rally in the S&P 500. But the average return's only been 1%. So it's not a huge return, but 1% is something. You have seen that, well, I guess the last 5 years has been a little bit of a gain. Last year was actually a pretty decent one. So we'd have to take a look back at the chart to see that exactly. But there you go. Oh, thank you. Is that a little tip? I appreciate it. Thank you. Anyway, so you got this seasonal moves that happen in the markets. I appreciate it. Thank you. And we'll take a look at this in some of the other markets as well. So like I was saying, on the S&P 500 right now, we are still relatively bearish. Let me get back over to my charts because that's what's most important. But we are slowing down that bearishness. You can see we did have a little bit of a rally, but not much out of this. And I don't know if we're going to be able to catch a fire and push to up to that 40-25. Really, the S&P is not the index to tell us. And here's why. I take a look at all the indexes because they're all interrelated. And right here, I've got a weekly study of all the 4 major index futures: the Russell in green, the Dow in blue, the NASDAQ in purple, and the S&P is in black. And I'm going to start it off right around the 14th of October. Actually, I'll widen this a little more. There you go. And the reason why I'm starting it there, I also have a line here for the beginning of this drop that we recently encountered. You can see that as we were moving off the lows from October, the Dow emerged as our leader. And what's very important is to find which market is leading you in which direction, because the leader tells you when it's time to turn. So when the leader hits a supply zone or resistance or whatever happens to it, and it starts turning down, these other markets really, you can see the NASDAQ wanted to drop, but it's been dragged to the upside by the Dow. But once the Dow starts to falter, that leadership fails, now those markets are ready to drop. I liken it to a helium filled balloon. Here's the balloon, the Dow, and these are weights attached to it. You pop that balloon, those weights are going to free fall. And that's what's trying to happen right now with the Russell and the NASDAQ moving to the downside. So, great question. When it drops, do you want to short the weakest? Yeah, typically. And I've even done this intraday. I was teaching class the other day. We were watching the four markets, and when the Dow hit supply, the NASDAQ went down the fastest because it was the weakest market. The reason why I chose October 14th for the start of my study was when you take a look at the individual charts, that was where the beginning of a major rally began. If you go back to, I'll go a weekly chart here, you can see there's the bottom on October 14th. So that's why I started there. And then our recent decline, well, we kind of started right here in the beginning of December. So if I want to know who is leading us down, I start there. And I can even make it on a daily instead of a weekly, but there's the weekly. I think I'm on a weekly. Yeah, I am. And you can see the Russell and the NASDAQ are taking us down. So if we want to know where's the bottom, you've got to follow the leader right now, which happens to be the Russell 2000. Another interesting thing to realize is that the Russell 2000 is a better index to show you what's really going on inside the United States because it's made up of smaller companies that don't have as much international exposure as these mega large cap companies do. You know, especially the Dow. The Dow is only 30 companies. Is that really representative of the entire United States? No, not really. Okay, so I think this is going to be a pretty good topic for a chart school coming up. To make myself a note, follow the leader. Let's see. We got a lot more of those planned coming up too, as well. Just so you know, I hope you enjoyed some of the chart schools that I put out there. You can see them on YouTube; they're absolutely free. A lot of fundamentals for technical analysis there, so make sure you check those out. But I'm going to put a note here. Or follow the leaders in a chart school topic. Anyway, so let's jump over to that Russell and see what's going on. Okay, so here I am on the Russell 2000, and actually I'm on the M2K. I'm going to go ahead and change this over. Oh, thank you. I'm glad you enjoy them. And we'll do Russell 2000 continuous contract. There we go. And that way I can go out to the weekly chart. And you can see that this is definitely a weak index. We've dropped quite a bit. We never made a higher high. You know, when we had that high that was being put in on the S&P, you saw that. There was a new high, but we didn't get that new high here on the Russell, did we? So big difference. We have a much weaker index. As a matter of fact, since 2022 began, not once has the RSI on the Russell ever been above 60. That's how weak that index is. That's how weak the U.S. economy truly is when you look at it. You know, again, the international exposure has helped out a lot of different markets. So we were only able to rally into this little bit of cluster of selling pressure and push back down. Matter of fact, if this continues down, let's see where we might go. We have a couple of tools we can use. One is a Fibonacci extension, so we can project where we might go. But I also want to look to see if there's any correlation with the zone, because zones are much stronger than any kind of indicators we can use. So obviously, here's the origin of this big rally. Technically, that's not a zone. That's a retest. This is the zone right here. I have drop, base, little rally. This was the retest of it. So believe it or not, we could look for the untested portion of that zone to provide us with more buying pressure. And guess where that lines up with? Both my Fibonacci extensions, doesn't it? Amazing, isn't it? You look for that correlation, that overlap of multiple studies that people are looking at. And if enough people, and more importantly, if the big institutions are causing those big pockets of buying and selling pressure, they're likely to buy there again. So we may continue down. Now, we do have the 61.8 extension that we might get a little bit of buying pressure. It's right near the prior low. So we might slow down as we approach, but this is not demand that should hold up anything. Well, maybe. Let's see. We do have drop. Just doesn't have enough of a move up to really call it a good zone. But you can see we are reacting a little bit to some of that buying pressure that originated here. This is my leg in candle, and I'll zoom in so we can see that a little better. And we have leg in, base, 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 leg out, and a little follow through to the upside. So we are reacting a bit to that, and you can see we are not able to get below 40. That's kind of interesting because typically when you go below 40 on a low, unless you have some sort of a divergence or some sort of other signal, you don't make new highs. Okay, and you'll see that in this bearish trend as we went down, okay, bounced up a little bit, went down, went below 40, could not make a new high. We moved down, could not get to a new high. Here, we made a move down, but remember I said one of the exceptions could be a divergence. And with the divergence, basically meaning that the indicator is doing something opposite of price, you can see we were able to make a new high, but we didn't change trend. Okay, and the reason why is we never got into bullish territory. We stayed below 60, and therefore we made new lows again. Or at least, yeah, we did. We actually made the new low. Couldn't get a new high. But now, this will be interesting. Not this week, but next week. And honestly, because we're in that season where there's going to be very light volume, I am not putting a lot of weight on the signals I would get until after the new year. Okay, you got to be very careful. Because there's going to be very light volume, any signals that you might get, and I'm going to talk about the signal in a moment. Okay, the signal I'm going to be looking for here is this week. Obviously, we're only on Tuesday. We got many more days left to finish this week. So, if, the week finishes the way we look at it right now, like that. If we break the high of that week, next week, okay, we get that, was that the 26th or, 26th, I think it is, Tuesday? No, 26th is Monday. Sorry, I knew it was Monday. Anyway, Monday we start breaking out to the upside, or Tuesday, whatever it may be. Then we've kind of confirmed that this is a little low that's being put in, and we are not below 40. And that's going to be unusual because that's the first low that we will make this year. Save for back here in, no, I'm sorry, that was this year. Yeah, this is the first one this year that we would make in the Russell that's not below 40. That's pretty significant. That could mean a shift. And instead of new lows being made, we actually may not make new lows. Oh, really? Kick somebody out here if I can. I'm not sure how I can do that. All right, there we go. Remove. So, sorry about that. Okay. Bear with me for a moment. Okay. Sorry, I said monitor chat there. Threw me off for a moment. Anyway, so continuing on here, and again, if we get the high broken, then we may put in a bottom where we're not in bearish territory. Now, I wouldn't get too excited yet because we're still sideways for the most part. We need to have that happen, plus we need to make a high that goes above 60 before we start calling ourselves the bottom of the market. Okay, but that would make this the bottom of the market if that actually occurs. And really what would happen for that to occur where we would actually go above 60 on the RSI is that prices would be making a higher high. So we would have higher low right here, followed by a higher high in price. And we'd be in an uptrend. And this being the leader to the downside, that would tell us we're at the bottom of the market. But I just don't see that happening yet. I see nothing but sideways until the beginning of the year, then continued movement down towards the 1520. There we have a higher probability of bottoming out because, again, it's that overlap between the demand back here that was already used. And you can see there was lots of buying pressure that came out of that area the first time. And there's still a lot of that zone left to give us another bounce. If we do fail from that area, it looks like we've got another little pocket right here, perhaps. Let's see, actually, no, it doesn't work. This would be it. I don't see us going that far down into the February 2020 lows, but it could happen. Anyway, that's our leader to the downside, and that's what's telling us where we're going to go. So if we take this down to the daily chart, I hit the wrong keystroke again. Sorry. Go to the daily chart now. Again, look at the smaller time frame here. You can see that we tried to make a new high, couldn't really do it, and failed. And again, we're staying below 60 and going below 40. So we're extremely bearish still in this daily time frame. So for this week, even, we're still making lower highs and lower lows. The market seems to want to continue to move to the downside. As far as where is it going to go, again, I'm not seeing any kind of buying pressure that could hold us up. And let's put in a line here so I can go back and see where daily demand might be. And there are some small areas. We have one right here. This was our low that we just hit back in our previous move down on October 14th. That's the demand zone that we hit, supposedly. And there's some other little areas along the way, just above this. Actually, let's see. Yep, this was the zone right here that has not been used yet. This is the weekly untested portion I was talking about. And then there's also this. So a couple potential targets on the move down for the Russell would be 1564, 1509. As we go back to where we are current price. Here we go. And you can see even the 61.8, that's just the retest of this prior area. We've wiped out all the buying pressure that probably is in that area. So we are likely to be able to cut through that, only pause in this area. So that's where I'm seeing the Russell going down again, unless for some reason we start to get more bullish pressure. We might get a little pause, but still make lower highs unless we can break and get that move above 60 on the RSI on the weekly, and we break these highs of 1900 on the Russell. Then I would say that the bottom has been put in the markets. But unless that, we're still going down. And as of right now, those are my downside targets now for the leader. Let's jump over to the Dow, since that's the strong market, and I should have that here. Actually, I was looking at the MYM, so we'll just go ahead and look at the full size. And remember, this has been pulling us upwards. Actually, let's go to the continuous contract so we can do the weekly here. There we are. And I'm going to clear this. All right, there we go. Just making sure everybody's still there with me. Good. Okay. Oh, what happened? Everybody's gone? I'm still live, I hope. Strange. What did I do? Okay, good. Still good. Okay, just making sure. Okay. I'm not used to this streaming, so I was trying to see who's still here, and it was showing me, I don't know what was going on with this. Anyway. All right, we're good. Perfect. Okay, so continuing on, my apologies. On the YM, we're on the weekly chart. As you can see, we did make a higher high, but here's a key thing that's really unsettling for those bulls. We failed to get above 60 right there. Okay. And since we couldn't get above 60, even though we made this new high, that's suggesting that we're still likely to continue to move down. We are flattening out a little, obviously, just like we are in the other markets. This is a little bit of weekly demand on the Dow that's trying to hold the markets up. But the big question is whether or not the Russell will hold up as well, because that's been pulling us all back down, right? So we need that strength from the Dow, but also we need the Russell to give up from pulling us downwards for this to actually rally anymore. So until that happens, I'm still looking at more moves to the downside in both the Dow and all the other markets. There is a weekly demand zone on the Dow here. What happened? Yeah. Jeez, that's weird. My computer's acting all kinds of fun today. Anyway, there we go. We got that demand zone on the weekly chart and right there as well. Okay. So, like I said, we're dealing with what's going on here this week. If we can, again, break the high and maybe drag all the other markets up, it'll be interesting to see, because we have not gone into bearish territory. We're more likely, though, because of the light volume during this time of year, to pretty much just go sideways rather than continue to go to the downside. And I can look back on the Dow, but there's not really a big need to go back on the Dow to look for demand because, again, the leader to the downside is going to tell us when we bounce, and it will not be the Dow telling us when to bounce. Right, Lucy? Thank you. Sorry, I forgot to put her away. Anyway. And you can see we actually did penetrate more of that demand zone that we saw that was not penetrated as much on the Russell. We penetrated more of it on the Dow. So that's actually more weakness that we have in this market. So again, Russell is a leader to the downside. That's one I'll be following. If we start to move back to the upside, the Dow is the one that's going to tell us where we top out. And you can see that the Dow broke this supply zone in our most recent rally and tried to stall out in this high, but we failed. And that was a key thing for me. We failed to get above 60 on these highs. I'm talking about closure. Okay, during the move of the candle, it was actually above 60, but we never closed with the RSI above 60, and that's a very bearish sign for this market. And now we're getting ready to tumble more. Once more, though, I'm going to be looking at the Russell to tell me where we're going to bottom out, not the Dow. But the Dow could go kicking and screaming to the downside, so to speak, and try to hold, dig its feet in a little bit as we start moving down. So we can take a look at some of these ratio potential areas, and you can see we're stalling out right now at 38.2. But no, I wanted to go to a daily chart. There we go. And the reason I'm going to the daily is to see, again, is there overlap between zones and the Fibonacci's? Not as stressful or not as important, again, to look at the Dow for that. More, I'll be looking to the upside, but I'm not going to do that until the Russell bottoms out and we see strength here in the Dow. And unfortunately, I don't see anywhere that we could turn around other than the weekly demand until here. There's no daily demand on the Dow. That's kind of interesting. But again, the Russell is the one that's going to take us down. If we hit demand on the Russell, that's when we'll bounce. But there's not going to be any help from the Dow until we get almost this 78.6% retracement, which will overlap with this demand zone. It's actually a little below what I thought it'd be in it. So for the downside, did I actually go to the daily here on the Russell? I just want to make sure I did. And the Russell had no demand until, again, 1564. We can even look on the 4 hour of the Russell. And yes, we're having a little more strength. And one of the things that is okay for the bulls, but this is more, like I said, a signal that we're going to go sideways rather than back up, is a divergence. So the weak market, again, I'm back on the Russell. The weak market is diverging. That's suggesting we're going to go a bit sideways and see a little more bullish activity in the next week. This is on the 4 hour time frame, but it doesn't mean that we're going to rally and get a good move up. We could just pull back to get new shorts. And I'll be watching these zones for that. Actually, this one's already tested and worked. So there's definitely a lot of selling pressure in that area. And finally, might as well look at it, but the NASDAQ was also one of the leaders to the downside. And let's go out to the big picture here on the weekly chart, bringing back the continuous contract as well. Here we are. Well, first of all, I actually already showed it. I think there was a little bit of a supply zone here that we started pushing down from. You can see how weak the NASDAQ is compared to the other indexes. Once more, if I compare these all in that weekly time frame, yeah, I'll just bring it up here. Even the Russell, just looking at the shape, just keep it simple. You can see on the Russell we are making lower lows and lower highs. The Dow was not on the weekly. Right, we made that higher high. But the NASDAQ is extremely weak and has been doing nothing but making lower highs and lower lows and getting below 40, not going above 60 for pretty much all of 2022. So again, very bearish market here, and I don't think we're done. This is the other leader between the Russell and the NASDAQ. It's kind of a toss-up at times as to which one is leading us to the bottom first. So you want to kind of pay attention to both of those because they're both giving us a lot of good signals to know where the bounces are coming. And we are not seeing any kind of sign that we're near the bottom as of yet. Looking again on the weekly time frame, we did a small retracement, about 50% on this little pullback, and could not get above 60. It looks like we're trying to fight our way down to fresh lows. If we do make fresh lows, oops, sorry, wrong spot, right there. We project down, and we're going to look back now again to see where might there be a bottom in this market. This might be from my daily, but there is a weekly demand there, weekly demand here, there. And you could argue that one too. Actually, that's pretty good. Right there. Let's see. Does this work? Not really. So that's it. We've got some demand zones again on the weekly time frame under 10,000. So let's see if there's correlation, and there is. Look at that. What happened there? Oh, it disappeared. I know why. Let me just delete it and start again. Come on. All right, never mind. I gotta redraw it. Computers, gotta love it sometimes. Anyway, there we go. Or we don't. There we go. Whew. Now let's go back. All right, so you can see that we do have a correlation, not with the upper zone of 95.16, but with the next zone down. Let me just go ahead and separate these a little bit better visually. What the heck? There we go. So you're looking at about 9,000 for the downside target if you're looking at the Fibonacci extensions correlating with the actual demand zone. And again, that could be a pretty good bottom side target for this bear market. So that's what I'm seeing with that overlap. You got a couple zones we'll come into, the 95.16, which is actually pretty good. And then also, if it gets really bad, that extra 500 down to 9,000. So we might get bottom out somewhere in that area. And that's what I'm watching for the NASDAQ and for the overall market bottom, if that's what we end up having. There we go. Okay. So that's what I'm seeing right now in the U.S. equity markets. Again, lots of bearish activity. As far as being able to kind of recover from that, it's really down to what happens next week. Not even next week. Again, even if we break the high next week, I'm not putting too much into it because it's happening with the light volume. We need to have a good rally with heavier volume, not lighter volume. And this is really just kind of the end of the year. We're likely to just go a bit sideways. So dropping down into the daily time frame on the NASDAQ, we are not at a demand zone. We were at a 4-hour one, I believe. So let's go down to the 4-hour for a moment and actually go to the specific contract. I don't want to use this continuous because you get some bad data sometimes. There we go. So going to the 4-hour specific contract, you can see that there's a demand zone that we just steered shy of. And there's this demand zone on everything except for the Russell. The Russell, we already violated it. But the other three indexes are coming down towards that demand right now. Let me get rid of that arrow. At about 11,000 here on the NASDAQ. And we were trying to bottom out a little bit. You can see as we made fresh lows in price, we're not really making deep lows in momentum. So we're losing momentum. To me, it looks like we're just going to kind of go back and forth sideways throughout the end of the year. So be very careful. Intraday trading and scalping might be good, but your swing trades are going to be a little bit challenged now that we kind of bottomed out just near this demand zone. We may end up resting and just bouncing back and forth within about 100 or, about a 300 or 400 point range here on the NASDAQ. So that's what I'm seeing here. And we can move on now, since we covered the equity markets. There we are. To the energy markets for this week. And of course, again, if you got any questions as I'm going through this, please let me know. I'm monitoring the chat. And here we are in crude oil. Go ahead and clear that. Doing some analysis earlier today on the smaller time frame for a day trade. Actually caught some of that short. I did not catch the bottom though, unfortunately. See, we had a big rally in crude oil today. So we'll go out to the bigger picture as well. On the weekly chart of crude oil, it looks a lot like the equity markets, doesn't it? Ever since May, we've been just slowly dropping. We had that big inflationary pressure going on in the equity market, well, just in the markets in general, right? Oops, there we go. And we are still not getting enough bullish activity to rally. You can see we actually made it below 40 on the weekly crude oil chart. So we're still having some struggles. This is our demand zone here. We're not quite there, but it's around $65. So there is possibility of drifting a bit lower, but it's going to take time. It's not going to move very quickly. Going down to the daily chart, now you really see it. If you see the biggest candles right now, they're red. That means we're pretty bearish. Plain and simple. We're making rallies. We can't get above 60. When we drop, we're going below 40, except just now. So what happens this week will be interesting to finish out the week. Obviously, I think we have a limited trading. I can't remember which day it is. I think Friday is a half day. I'll have to take a look at my notes. I just got the emails from the exchanges. But we started moving down here. I'm going to use this. And it just missed. We've had a retracement. There we go. So what I was going to look for is on this retracement that we're experiencing, and yep, it was about 50%, right? Oh no, 61.8. It's pretty deep. It means there's a lot of underlying bullish pressure because we did a pretty deep retracement here, 61.8% approximately. If we get new lows coming in, so far we're still making higher lows and higher highs for the past couple days, right? We have Friday bearish, Monday, Tuesday bullish. And we tried to put in a bottom. As a matter of fact, we did. We officially put in a bottom right here with the RSI not below 40. So that means we may actually be able to continue to make some new highs and change this daily trend. Currently, the daily trend is down in crude oil, but this is a low followed by a higher low. And all we need to change the trend is a higher high, right? That's the definition of an uptrend. Higher lows followed by higher highs. So if we get above 77.83, we're in a bullish trend. Our next target is likely to be the next Fibonacci level. Or if we go into a daily chart, I hit the wrong keystroke there, sorry. There we go. Now this is the daily. Let's go to 240. Then what we should do is look to see, is there, nope, this is a tested zone. There's nothing to hold us back from making that new high and moving all the way back up to the origin of this drop at $81, $81.28. So kind of looks like that's what we're doing. You can see when we had a lot of weakness, we were very, very bearish. But we rallied up, got into bullish territory, failed to continue the bearish momentum, and now things are changing. So it may not happen today. As you can see, we're topping out before we get above 60. But once we break that 60 barrier on the 4-hour, we'll break it on the daily as soon as we make a new high, most likely. Yep. As soon as we make that high above 77.83, we'll be in a bullish trend. We'll likely get above 60, and then we should shoot up to 81.28 pretty quickly. Now, from there, I don't know if we're going to have enough momentum. We'll take a look at the weekly. Still pretty bearish. So that may be all we get out of that bullish move. And I can put in the fibs here on the weekly. Just want to see if there's correlation on it as well with this 81.28. Kind of looks like there might be some, yep, right there between the 50 and 61.8. So if that's the case, we just retrace back into that area and then continue our downward trend. Because again, my downside target eventually, I believe, is going to be, that weekly demand zone that I mentioned down below. There we go. Where did I have it? Come on. Oh, I got rid of it. The weekly demand's right here. So that is correlating with right around the 61.8 extension of the previous impulse on the weekly chart. So that's kind of what I'm seeing right now, is that we're likely to get continuation to the upside, small change in the daily trend up to approximately 81.25 right here before we reverse and then start moving back down towards that $68, $67 level. So that's what I'm seeing going into probably January and February by the looks of it. It's going to take us a little while for all that to follow through. So that means in the short term, we might have some bullish moves again in crude oil. So we'll move along into nat gas. Take a look at what's going on there. And again, I'll go to the continuous contract to give me a little more history. Actually, you know what? On this one, I don't need to, I believe. Just make sure. And I'll go to February. I'm not sure if we rolled over yet on the nat gas. That's the last one to roll. I think we're still in January. We'll go look ahead into February. And you can see that we did make lower high and lower low here on the weekly chart. We are in bearish territory. And it was kind of told to us that it was likely to happen when we came down here, broke to a fresh low, went below 40, couldn't get above 60. We're in a bearish trend, period. Now we're testing this demand, but when you're below 40, typically that means you've got enough momentum to break through that demand. So nat gas looks like it's got more movement to the downside potentially, and there's not really any kind of demand until the 3.5 area, right about there. So it could get pretty bearish for nat gas. I mean, we went all the way up during that inflationary period to 9.5 and dropped all the way to 5.5. What's another drop from 5.5 down to 3.5, right? And it looks like it very likely to happen. As a matter of fact, looking at this impulse down, we duplicate the previous impulse, because you can see our first move down did pause at the first target, 61.8% of this impulse. But if we duplicate that same move again, it takes us right to 3.8, which is kind of right in this little cluster of buying pressure. So looking to see that we're going to continue this bearish trend for a bit. Going to the daily chart, pretty much seeing the same thing. And I can put in some different measurements perhaps based on the smaller impulses, but we're getting the same effect overall. We have impulse down, correction up. We just hit target 1 right there at 5.233. Probably end up closing there pretty close to it. Let's see. Oh yeah, no, we've already closed for the official market close for the energy markets earlier, about 2 hours ago. Anyway, you can see if we continue to push down, we have 4.22, and then right there where that demand zone is, that's the next target. That'd be 127.2% of the previous impulse. So things are looking pretty bearish for nat gas. I don't think I have any quality demand. A few little spots might hold us up. Now this again was the weekly that's already been tested and likely to break through. This is the stronger weekly down below. But along the way, obviously, daily demand zones will come into play and cause bounces. Like right here. And let's see. Nope, that's not part of it. That's it. So, once again, looking for that correlation, you can see 4220 lines up with the lower demand zone right there. So it looks like 4.2 is our next downside target on the daily chart. We could get there within the next week or so. And that's what it looks like. So if we get any kind of bounces, we would get a bounce pretty much where we are right now if we're going to get one. If not, obviously we continue straight down. But the likelihood is we'll get a small bounce. It's just normally what happens. As a matter of fact, it's very likely. And here's why. Clean this up again. There. Price made a new low. Right here. Oops. And momentum did not. That's called positive divergence. Now, it's not official yet. It's diverging, but it's not a divergence. Here's the reason why. Diverging is what it's doing. It's not making new lows in momentum. You know, if you don't have more bearish momentum, how can you make new lows? Just like if you have new highs, you should be doing more momentum, not less. So that's showing we have less bearish momentum than we had before. That's an unsustainable move. You usually retrace those pretty quickly. Doesn't mean reversal necessarily. We need confirmation after the fact. But this is not confirmed as a bottom yet because we could have more lows. The way you confirm a low is by having higher low and higher high on either side of that candle. So we still need to go break the high of that candle on the next candle, meaning tomorrow or the day after, whatever it may be, without making another low. So until that happens, we are not actually divergent, but we are diverging still. So it's showing us there's likely to be a turn. Doesn't necessarily mean it's going to happen right now, but based on the movement that we had and the Fibonacci extension, it's likely to happen here. So if it does, we go down to the 4-hour time frame and look for a good shorting opportunity to re-engage, and boy, do we have a great one right there. I would look for a short right in that area. I can get that right. Come on. Should be at the close, which is 5.678. There you go. And I'm not sure if that lines up with a fib level, but it looks pretty close. If not, there's also the one just above it too. But yep, I was right. It's a 38.2 retracement. Look at that. Put in the zones. There you go. That is a high probability area for a good short to continue this downward move. And again, we got movement. Heck, you could ride that down as long as you want with a trailing stop, possibly down to that 3.8 area or 3.2 even. So that looks really good with that overlap. This is the next zone I was looking at. A little rally base drop as well. Kind of in between the next two levels, the 50 and 61.8. But this looks really good for a shorting opportunity on nat gas. Again, between 5.678 to 5.765 or even 5.732, which is the actual fib level inside of that supply zone. And stop and go above, target those demand zones we're talking about. Next energy market, gasoline. How much is it going to cost you to fill up at the pump? Well, the good news is it looks like it's, it rallied a little bit, but overall the trend is still bearish, which is good, right? I'm getting ready to hit the road this week for the holiday and drive up the East Coast and visit my wife's family up in Virginia this week. Since we're taking the dogs, we drive. Actually, nope, that doesn't work. It's this. So it looks like we're still moving down. We're still very, very bearish. We're getting a small retracement right now, but the weekly supply looks pretty good here. We still have drop-based drop, so we're not likely to get above that 2.3. Oh yeah, some more hiking, absolutely. Yeah, her family has property on the Potomac River, so we'll go hiking there. Probably in the snow, hopefully. I don't know if it snowed there recently. I don't know. Well, maybe this week. I noticed a cold snap coming in. Anyway, I got all the windows open just to rub it into everybody right now. It's probably freezing where everybody is, but right now I got my windows open. Well, I had to close it because of the ducks, but there we go. That's a nice balmy 76, I think, degrees out. Perfect weather right now. So beautiful out here. Anyway, I'm rubbing it in. Sorry. So we're getting a bit of a retracement again on gasoline. Get back into the markets here before somebody really gets angry. For you Brits, I think it's about, 23 degrees? I always forget the conversion. Mid-70s. But it is supposed to get chillier here. I think we're going to get down the 50s. When everybody gets that cold snap this week. Anyway, so you can see we got a retracement again, and if we drop down from the weekly down to the daily, we might be able to fine-tune where this may go. And you can actually see on the daily, we're getting a little more bullish activity that should push us up into the next daily zone right here. So we're looking like we might get a pullback into this area. It doesn't actually line up with any fib levels, although really the bearish pressure didn't begin till here. It's probably a little bit better. And we do have the 50% kind of right in that area. So that looks like a good target. You can see we already did use the 38.2, but we are going to go higher, it looks like, towards the end of this week. This is on the daily chart. So we might continue to push up to the 23238. It's kind of right in this area is where I'm looking for the prices to continue the march downwards. And I don't know if I can fine tune that anymore. On the 4 hour, actually we can. There's a zone right at the beginning of that daily right here on the 4 hour time frame. So it might be a little bit less risk, but you do have drop, basing, and there's your drop. So again, you still have that 50% retracement value inside, but we have the zone 2.2814 to 2.3522 is the possible selling point for the continuation to the downside for gasoline. And then finally, for the energy markets, heating oil. And we'll get to the stock market for a quick one. Let me clean this up. Oh, a little behind, but that's because that's my fault. I wasn't quite prepared for this, but we're going okay. Anyway, on the weekly of heating oil, same thing. We had this big move down. We're getting a little retracement, but it doesn't look like we're getting much relief out of this. Heating oil even though you'd think it'd be very popular right now, obviously with the cold snap coming in, it does look like the prices might go a little bit sideways and start to drop yet again. It looks like we're done with our retracement at this point. We had a very weak move, did make it down below 40 and couldn't get very high on the rally here. So if we're using the fibs, I'm kind of curious just from the origin of this move down, it looks as though we got about a 61.8% retracement that we hit. Yep, that's what I thought. So not sure if that's the end of the retracement or if we've got more. It looks like it's the end. And we really don't have a reason to stop here. There's not a good demand zone. As a matter of fact, there's not any good demand until 2.2, to be honest with you. So, well, it'd be interesting to see if we continue to push downwards in heating oil. Going to the daily chart, again, we rallied up but couldn't get into bullish territory. As a matter of fact, weekly we hit a, I'm sorry, not weekly, daily, we hit a daily supply zone here. Rally, base, drop, and that's why we started turning down the way we did. But the only good thing for the bulls here, we do have a demand zone near the bottom again, and we may not even get there. Notice we're getting this bullish pressure, and we can't seem to get below 40. So if we break the high of this candle, we're likely to push back up and make another run for this supply zone. If we get above 60 with the momentum as we get in that supply zone, there's a very good possibility of breaking out. And I'm trying to see, there's no other supply above. So that could change the trend completely. And the warning sign would really be, again, if we break to a new high here, then we're holding above 40 for the first time in a while. And it could end up changing the trend. We'd obviously have to break this high in order to actually have higher lows and higher highs on this daily time frame and change the trend. Otherwise, then we're likely just to pause for a little bit. And again, this is more likely that we just go sideways before we continue to move down. Maybe get a small bounce at this area before continuing to push lower. That's more likely based on what's going on this time of year. And of course, just kind of curiosity, if I go back to MRCI, I can actually take a look to see the seasonal moves for those. Energy. And we look to heating oil. Let's see, we'll do February contract. Come on. Let me zoom out a little bit so we can actually see the whole chart. There we go. And zoom back in. And December, you can see the end of December for most of the time, the last 30 years has been somewhat bullish. And the last 15 was bullish. However, that's changed. And you can see the last 5 years, well, 20th to 26, a little bit of a bullish move and then a retracement again. So it actually does look like we might get a little small rally and a possible change in the trend direction. And you're actually seeing it right now. I thought we were likely to go sideways, but you're actually getting the confirmation. If we break the high here, 3.06, then we are actually following through with that historical pattern and creating a new higher low and higher high. You might have to ride this trend to the upside. I don't see any target on the upside. Let's go to the weekly. And on the weekly, we have rally base drop. The next target would be, come on, right here, about 3.3158. So again, if we go down to that daily time frame, if you break the 3.0648, we should continue to move up until you get to 3.3158 at least, although that's been tested already. We could go much higher. You could see moves up into the 3.5 range. So that'd be a nice move. And again, seasonally, that's normally what happens. We should be seeing a move going until mid-January here, about the 14th or 15th of January. So expect that if we do make a high this week, 3.06. Okay. So let's see what else we got here. That's pretty much it for the energy markets. Went through all those. So as far as the sectors go for stocks, I went ahead and did my charts ahead of time a little bit on this. And you can see that for the last 6 months, we are still in defensive mode. We're still seeing a lot of gains in staples, healthcare, and utilities, obviously energy with inflation. But other than that, industrials for some reason have been popping up. But for the most part, we've been seeing the safe haven securities. And what I mean by that is if you go to, see, I think it's here. Take it to stock charts. com. And this is where I'm getting that information from, by the way. There's performance charts, sector ETFs. And again, it's just showing me what the ETFs are doing in relationship to the stock market, or if I take it out, that's how they're doing without the stock market. So what I see is right here, if you're getting consumer staples, healthcare, and utilities as leading sectors, that means you are in the middle of a bear market and you're expecting the economy to start going into recession. Well, we're technically already in recession. We've had 2 quarters of negative GDP growth already. So I'm not sure if that's changed yet. I have to take a look at the fundamental numbers. But overall, that's what the markets are telling us, that we're not at the bottom yet. When we're at the bottom, you'll start to see financials and real estate leading. And again, if we look at the last 6 months, that's not what we have yet. So you need to see more financials and real estate leading. And they don't usually lead when interest rates are going higher, right? So we've got a problem with inflation we got to stem off, as well as a problem with the economy. And the problem is, if you raise rates too quickly, you could stifle the economy and cause it to sink into deeper recession as well. So anyway, that's what we're seeing so far. Is again, still a little bit of a flight to safety, pointing towards the stock market to continue to move to the downside. And even the last week, December 12th through the 19th, again, you're seeing that the markets were down, but the least down were the defensive sectors. So that's kind of confirming that move that's been going on. So looking at the overall market year to date, this is what we've been seeing. Energy, obviously the leader with inflation, and some of the defensive players, healthcare, non-durables, health services, those have been holding up pretty well. Looking at this last week, everything's down except for, what is that? That's Pfizer. No, Pfizer's over there. I'm not sure which one that is. There's one that was up 8%. I'll have to check that out in a little bit. But for the most part, it's pretty red. And we're expected to see that continue to go down again until we bottom out from the Russell or the NASDAQ. Oh, hello from Philadelphia. Nice. I grew up in the Allentown, Bethlehem, Easton area. My mom's from Philadelphia, so welcome. All right, so as far as sector ETFs, looking at the consumer discretionary, they finally broke this channel. We've been in this channel for such a long time, going back and forth. We had a false break, so we got to be careful. And it looked like it was going to be legit, right? Because we did have a lot of bearish momentum. We broke down, but unfortunately, it came right back up. So are we getting the real deal this time? Hard to tell. It looks like it. That's just saying there was some news today. It's not a big deal. Just ignore that lightning bolt. But notice the momentum is much stronger than it was before. This looks like a sector that's going to continue to slide. So that's the consumer discretionary. You would normally expect that to be bearish anyway if the market is bearish, right? Consumer discretionary products you only buy when you have extra money because the economy is doing well and you're doing well. So moving along here, the communication sector. This was a trade idea that I had a while back. It actually hit target 1 multiple times. You can see this was the original entry, hit target 1, did it another time, didn't get down. Remember, if you're too bullish, you can't make new lows. It made another test right there, but we were not too bullish. And look at that, we made that new low. So again, that RSI is pretty important for me. It looks as though we should be able to continue down towards that target 2 after a small retracement. So continue to look for more of the communication sector to be very, very bearish if you're playing that sector in the stock market or in options. The technology sector tried to rally up to a new high, but look at that. It could not get above 60 on the RSI. That's very bearish, and now we've made a fresh low. So we snapped the small upward movements that we were trying to make. We couldn't really make a trend. We had a false breakout of our sideways movement that we were in, and now we're not legitimately breaking out yet. We haven't gone below 40. So that could very easily snap back up into the 130 level. Okay. Yeah, supply zones are still holding. So again, I'm still very, very bearish on the overall stock market. So I went over a lot of that at the beginning, and I could do a little review at the end as well. But I'm going to go through the sectors, and I'll take some requests at the end too. Builders, we actually bounced off a supply zone on the builders as we had a lot of movement to the upside, and then started recently to fall down. This is actually the weekly chart I'm looking at, weekly supply that we hit. So we had a pretty deep retracement, 38%. Couldn't get into bullish territory, couldn't get into bearish. This looks like a sector that's likely to go sideways now for a while. So not really something you want to be in unless you're doing iron condors on options. Looking at the daily chart, we actually did bounce off this demand zone that I picked from last, actually, no, it's longer than a couple weeks. And we held up with decent momentum, which now means, again, I think we're going to go sideways in this sector for some time. So it's not something I really want to play unless you can find some good builders with premium on an options trade. Okay, so one of the ways you'd have to go and find, you can actually go to the XLB. This is a good way of finding trade ideas. I would say, I think it's Market Watch. I always go to smartmoney.com, but it's actually Market Watch now. If you were to go to XLB, you go to the ETF and you'll click on holdings. That'll tell you what actually makes up that sector. Some of the leaders in that sector. And there it is: Lind, Air Products, Sherwin-Williams, and so on, Freeport-McMoran. You can start looking at some of those individual securities, especially Lind is one of the leaders right there. As you can see, that's a foreign company. It's PLC, I believe. So LIN, if you started analyzing LIN, if the sector looks like it's going to go sideways, again, that was XLB, looking like it's going to go daily chart. There we are. Kind of sideways, you could look at LIN. If it's going to look very similar, and it is a very similar chart, depending on whether or not there's premium, there may be an opportunity for an iron condor. And if you're not familiar with that strategy, that's something that I might be able to teach you along the line here. But right there, you could do an iron condor between roughly 350 and 325, maybe collect a little bit of premium for each month going by. I don't know what the premium is right this moment. Actually, I can tell you in a moment. See, great trade ideas that you can just come up with if you know how to trade multiple assets. It's one of the strengths, having that relationships between the different sectors and assets, things like that. So iron condor, and this is going out 31 days. I was saying 325 roughly. Might be a little too close, but we could check it out. 320, 310, and it was 375, I believe, on the upside, right? Oh no, 350. My bad. It's only $25. So 350 to 360. And you might be able to collect a little premium. In this case, it's only a 51% probability so far. But again, looking at what's going on with that movement, I could go a little further out and still collect decent premium here. Maybe go down to 305 to 295 and collect $200 with a $300 risk, but a 66% probability of collecting that premium for that month. I'm not saying that's a great trade. I would do a little more analysis on it, but that's kind of the idea of what you can do. And it all comes to basically because the sector is likely to go a bit sideways, you find stocks that are likely to do that kind of a move as well. Anyway, the energy market, it looks like it's going to continue to go a bit sideways now that we've come off the highs and inflation is a little less of a problem than it has been before. Unfortunately, we came pulling back into a demand zone, which is also near the 50% retracement. It looks as though we're going to go sideways throughout the end of the year here in the XLE. So I'm not expecting much out of that. Same thing. You can look for the energy markets. They might have more volatility because of the fast move up and fast move down. You could collect more premium on something that's going sideways in the energy market as well. So once more, you would look it up by going out to Market Watch, XLE, and search. There it is. You have the holdings, and now you've got a list of potential trade opportunities. ExxonMobil, Chevron, Schlumberger, ConocoPhillips, and so on. So a lot of ways to think of this and use some of this information hopefully for you. Anyway, consumer staples had a little bit of a pullback, but this is suggesting that we're getting ready to bounce a little. We did a 50% retracement, but couldn't go into bearish territory. Remember, if the market starts dropping more, a little bit faster, which I'm expecting things to become a little bit more to the downside after the new year and make that fresh low, you'll see a little bit more rallying going on in the XLP, which is consumer staples, maybe even some in the healthcare sector as well. Oh, Lynn, historic volatility is near lower 20%. So yeah, not much premium then. I was wondering about that. The healthcare sector, speaking of right here, we did actually break out of supply, but we did it with a negative divergence, and that's why we pulled back. It looks as though we're going to stabilize, though. This is where we're pulling back to because we can't seem to get much lower with the momentum. So I'd expect a continuation moved back up to retest that supply and possibly even make some new highs in healthcare going into the new year. So that's one of the few sectors I'm seeing that actually has some potential to the upside coming up. The utilities, that is going to be dead. You can see we bounced off a weekly demand zone and retraced. Okay. And for the most part, we're stuck between zones now. We're stuck between supply zones overhead and this demand zone here at 68. So again, another sector that might be going back and forth because it's battling. Utilities are highly leveraged, and when the Fed raises interest rates, they can't buy back their old bonds. So it's very difficult for them to operate because they can't get more investment, more money, more capital. So with high interest rates, it becomes a bit of an issue for them. Typically, they thrive in low interest rate environments. You can see when the Fed's been raising, they've been dropping, except recently we had a little bit of a pop. But overall, this is going to be a sector that's kind of going sideways for a while as well. Financials, we need this one to kind of lead us out the bottom typically. So this is looking very bearish. We pulled back 61.8% already. We went into bearish territory. Basically, what we did is we had this negative divergence, which was the warning sign. We pulled back. We made another high right here, but couldn't get into bullish territory. That was the death knell for the financials, and that's what's sending us much lower. This is a pause before we go lower. If we rally at all, I'd be surprised if we get above this 34.44 before we drop more. So I'm expecting more weakness coming into the financials. It'll be interesting to see what happens because we're closing out the fiscal year for a lot of companies and the calendar year. So we'll have earnings season coming up, coming in January, mid to late January. Look to see as the financials release their earnings, they may be weaker than it had expected. That'll also send the sector much lower. But this doesn't look too good for the financials right now. And real estate. People have been wondering if that's going to pop again. It's been very, very hot. And guess what? It is. You can see we tried to rally. We did make it into bullish territory, but then dropped into bearish territory. When I took this picture earlier today, we were below 40. I don't know if we finished there. Let's take a look. And we did. We finished below 40 today for the day. So we do have indecision, but the fact that we made it below 40 means we might only get a small rally before we go much lower in price. So the real estate sector looks like it's going to be starting to turn to the downside as well. So there might be some good shorts in that sector. Looking forward to that coming into the new year. Some previous trade ideas. I don't have any new ones for you this week. I just wanted to look at some of the previous. Unfortunately, Microsoft, if you are still in this one, it already surpassed target 1. It's not making it to target 2. As you can see, we had a negative divergence that led to this drop, and we are still in bullish territory, so we might rally a bit, but it doesn't look like it's going to get much above 255 before it stalls out. So if you've gotten profits in this particular move, remember our early November was our buy point back here, and it rallied up to target 1 very quickly, but it's been a long fight. I think the fight is over. I don't think we're getting much more out of this, unfortunately. On Disney, this one is still going, though. Disney, I was looking at a short. Funny enough, I saw there was a Jim Cramer pick for this. He was telling people to buy it at 98 bucks. Meanwhile, here I am shorting it at that level. Anyway, you can see that it's going down. We've hit target number 1. We're going to get a little bounce. There may be some small supply zones that give you another opportunity to short it, but it's going to continue to move down to that target 2 of 77.50. I can easily see it getting there in the beginning of the new year. AppLovin, unfortunately, is not giving us any love for the short. You can see that it is just continually drifting to the downside. Doesn't look like it's going to give us a good opportunity to get in. I'm moving on to something else. It's not happening. Borg Warner also drifting a little lower, but not moving into our demand zone anytime soon. So unfortunately, I've been waiting on that. It just doesn't look like it's going to happen. We're still just going sideways, so I'm giving up on that one as well. And finally, CPRI, Capri Holdings, also ended up going up towards our targets rather than coming back to let us in for the long. It does look like it's changing, though, and that's not a good thing. It's having divergence where we had higher highs in price, lower highs on the indicator, and we're changing trend direction. So do not try to buy this anymore. It's not likely to hold that demand zone anymore. Oh, I did have one more. Yum Brands. Yum Brands also divergent. You can see higher high in price, much lower highs in the indicator, might be coming back for another retest of demand, but we're still bullish. So this may still have a chance, but it's going to be a slow grind to get up to target 1. Unfortunately, it's not going to be a very fast mover. So just keep that in mind if you do decide to try to engage. Anyway, that's what I got so far for you guys' picks. If anybody's got any questions, I'll take a few minutes to answer some questions. I've been going on for about an hour and a half almost. So you can also, if you do not have time to answer your question today, hit me up. I have an email. You can email me, brandonwendell.cmt@gmail.com, or also hit me up on Twitter @TraderBDub. I like to answer questions there when I can as well, and I post pretty much every single day, so you can keep in touch with what I've been doing there. Hopefully you enjoyed this live session. I had a lot of fun doing it, although I had a little bit of challenge, but we got through it. Hopefully got some good information out to you. And like I said, there's a lot more to come. We're going to be doing a lot more of the chart school and a lot of other stuff that's going to be coming from the TMO, the Trading Mindset Organization, is going to be releasing a lot more information coming up. So make sure you subscribe and set up for alerts on our page, on our YouTube page, and that way you can get all the videos that are coming out. We got Trading in the Zen. There's so many different things that we do. So I want to thank you guys for being here. If there's any questions, type them in. If not, trade safe and trade well. Gotta keep an eye on the questions there. Thank you, Steve. I'm glad you enjoyed the session. And thank you. SLV Daily, is RSI diverging? I'll take a look on silver. Actually, let's go here. SLV Daily. Sorry, trash trucks are outside right now, so you hear some banging around. Yes, it is diverging. We had a divergence once already, only led to a small pullback. We got a big gap up, but not the momentum we really need to hold that. So yes, silver does look like it's diverging. Now, on silver, I prefer to trade the futures, to be honest with you, rather than just SLV. Even if you're trading SLV, the futures will definitely give you a little more of a heads up from time to time. So let's take a look. We're in the March contract right now. So here I look at the futures, and actually, well, that was a 4-hour chart. We caught a nice demand zone a couple days back in one of my classes here. But if I go out to the weekly's good. We don't have anything overhead. We're in a bullish trend, looking like we should be able to continue. Going to the daily, though, that's what you want to look at, right? And that is diverging on the futures as well. So that is a sign that we might get another pullback here. As you can see, the RSI is much lower than it had been. So both SLV and silver futures are showing a bit of weakness here. We get again to the 4-hour. Well, it could retrace all the way back down to 23.25. Honestly, that's the nearest demand zone right here. We have rally-based rally off the lows, $23.42. My decimals off for some reason there. I don't know why. But yeah. So there's definitely likely to be a bit of a pullback. That'd be a pretty deep pullback. I don't know if it'll go deep that far, but it is possible. And let's see, I'm not sure what that translates to on SLV. Oops. Actually, I could do that on this chart too. iShares Trust. You see, look at that. The SLV itself, the ETF, is already falling down quite a bit. So the demand zone here is around $20.46. So it looks like we may be pulling back to that point. All right. Anything else? Oh, thank you. You're very welcome, Nuri. And you're very welcome, Bill. Great. Well, I'm going to have to call it a day. I got to get going. I got some things I got to take care of. I want to thank you again for being here. And hopefully, again, you'll hit that subscribe and the like button, and also get the notifications for the future, so that way you'll be aware when the new videos come out, coming up next week. I am going on vacation, so probably won't be another session until next Wednesday. I'll be able to record again when I'm back. So bear with me, but it'll be kind of a slow week, I imagine, anyway, with the holidays going on as well. So until then, trade safe, trade well, everybody. Take care.